I just want to share this because look, I see a bit of talk on crypto that we're moving higher on low volumes, all this and that, but we have to remember who's buying Bitcoin here. Yes, it's retail to a degree, but it is via the ETFs. It is via Sailor smash buying with capital being raised from STRC. How is that measured? Well, it's not in volume flows that you're looking at this. So this chart here, this is Bitcoin US dollar Binance. This is only so if you look at the volume profile down here, it's nothing, absolutely nothing. And there will be volumes buying Bitcoin on these exchanges, but where is the actual volume coming in? Well, it's via, again, the OTC desk, over the counter, and also ETFs, which don't get shown in this calculus. So we have to be very careful when we're thinking about volume. Bitcoin volumes are really low, we're breaking out. Well, not necessarily. The big volumes, again, are coming through. Like, look at this. I focus on funding a lot because that is when Bitcoin has been derivative led. So when we're at the top, coming down, really aggressive derivative squash. But also over the last few cycles, Bitcoin has been led a lot by derivatives. And when you are looking at really strong support or resistance levels, the ability for Bitcoin to rip through is obviously based on the demand coming in, the spot organic demand, people just going on exchanges buying or institutions buying over here. But the funding builds up this rocket fuel. It's this tinder that's just sitting there that can just get ripped right through. So if shorts are paying a big premium to be open, their positions are exposed. They're going to be naked. If the spot bid continues to roll higher, those shorts can get pancaked and it thrusts us through levels you didn't think we could. So that expansion can accelerate. And no one really expects that to happen until it does. Outside of, you look at funding, can maybe give you a bit of insight to where we're at. But the funding's now back to neutral on an annualized basis. That's okay. But what I'm looking at here is maybe a structural shift. The downtrend was breached, or you cleared the 10 EMA on the weekly chart, like it, cleared the 20, had a nice big wick, then closed back there. So the resilience is really strong. The buyers are really stepping on the gas here. And once we get above, like I said, that short-term hold at cost basis, I think we begin to accelerate towards the 200-day moving average, which is right in this volume block at 83,000. That's sort of that first step. First step was the 79,000 short-term hold at cost basis. Next step is the 200-day moving average in this zone. So that's the yellow. So if you are a bear or you're looking to buy lower, or at least not buy here and just buy a little bit lower, you really want to be watching for the interaction at 83,000, thinking that we might gravitate back towards the 10. So I'd see the 10 on the weekly just slowly climbing its way up. We're now at 75,000 for Bitcoin on the weekly. So you can see it's jumped $1,000 in a week because it was down at 74 previously. You had this beautiful horizontal that's sort of giving us additional support as well. So this climbing higher, I think, is great, but also it's a good barometer to maybe look at structuring some bids there